All right, it is Friday, and as you know, on Fridays we do our Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing really well, buddy. Thank you for doing this. I appreciate this. It allows me to look back over the week and decide what was most important. So thank you so much.
I love it. So let's get right into it. Today, actually, there were some numbers reported, job numbers. What happened there this week?
Yeah, this was the big number of the week. This is like one of the top four things. There are four metrics that the Fed is going to be looking at between now and the next rate increase, right? We got our 75 basis point next week. There's a big tug and pull between Wall Street and Main Street. Are they going to pivot? Are they going to slow down? So there's four things. There's two jobs numbers and two CPI reports. We got the jobs number one today. Expectations were 238. They came in at 528. A huge, massive beat. On top of a big beat, unemployment rate, which had been at 3.6 for 4 months, went down. It's now 3.5%. And then finally, the boogeyman of all boogeyman, wages. Wages went up 5.2%. So all of this is not good for not good for Wall Street. Wall Street wants the Fed to stop. They want him to stop. They want him to pivot. They want him to cut. The Wall Street is addicted to cheap money. Sorry. Jobs number today says Fed has lots of work to do. They are not close to being done. So as expected, rates went up. The 10-year went up. Stocks are under pressure because, again, the Fed has more to do. And as a real estate channel and as real estate guys, we had a great week for rates. I suspect rates are up today and they will be going up next week because, again, the Fed has more to do.
Yeah, very interesting. Very interesting how that number basically would be an indicator of, okay, the Fed's not done. This is real. This is going to continue. Wall Street loves cheap money. I think you've emphasized that. It keeps that stock market climbing and roaring. And so, again, sounds like obviously interest rates are going to be affected. What do you see happening with interest rates specifically?
Well, right now, there was a bet before this number that the September meeting would be 50 basis points, which is where I've been. I've been there for a month now. The odd, I suspect by the end of the day, the odds will be that it'll be another 75 basis point raise in September. We're going to talk about CPI later in this show, so we'll save that. But there's a chance that this number combined with CPI next week actually gets us the dreaded inter-meeting raise, which is something I know Jerome Powell does not want to do. Jerome Powell does not want to surprise the market. He does not want to move in August. But if we get a nasty CPI number next week, it could happen. So, yeah, rates are going up. It's just Fed's got more to do.
Fed's got more to do. We are going to see rates continue to move up. Also, too, just explain just briefly, so the Fed meets on a pretty regular schedule, but then they also have breaks where they do not meet. But that doesn't mean they can still raise the rates.
Yeah.
Volcker had to do it. Explain that just in a little tidbit summary.
Yeah, so I think in year 2022, the Fed meets 10 times. It's a published schedule. It's known by everyone, right? Like the next meeting is September 20th and 21st, for example. We all know about it's not secret, right? These are well scheduled. But it's also scheduled in August. They have their year, it's like an offsite, if you will. Basically, they go offsite. They invite a lot of other Nobel Prize winning laureates, and they talk economy. It's like a Federal Reserve geek fest. And that's happening in August. That's why there's no September meeting, because they're all meeting in I don't know, North Dakota, somewhere, Montana, I don't know, somewhere where all the rich play. And that's the August meeting that you'll hear people refer to. That said, the Federal Reserve reserves the rights to raise rates, the federal funds rate, any day they want, even on the weekends. Paul Volcker repeatedly surprised the market and raised rates on the weekends. Jerome Powell is no Paul Volcker. Jerome Powell has adopted a stance of tell the market what you're going to do and then do what you say. As I said earlier, I think that may go out the window if we get a nasty surprise CPI. Because again, this jobs number, not good for the Fed. The Fed wants the economy to slow down. we're not in a recession because of jobs. We just added 500,000 plus jobs in a month. That is not recessionary. It's just not. That said, if you know how economies work, jobs are actually a lagging indicator. So this could be, the time of it starting. I get it. But yeah, we're not in a recession as of last month. So it is wild to watch Wall Street and the macro econ guys just disagree so violently.
Interesting times, volatile times. Let's talk about CPI. So explain again, we talked about it before, but again, for a brand new listener, what is CPI and what's going to happen next week? And what do you think is actually going to be the number?
Oh, I like that. So CPI stands for Consumer Price Index. It's essentially a index of how much more expensive gas, groceries, rents, clothes, basically a basket of goods. How much more expensive is it to live, shop, eat in the United States for the average consumer? Our last number was reported 9.1. We have the next reading on Wednesday, August 10th for July. Right now, Wall Street is screaming peak inflation, gas down, commodities down, peak inflation, peak inflation. Wall Street wants it to go down. Federal Reserve wants it to go down. They do. They would love to say peak inflation. Wall Street wants something with an 8 on it, right? They clearly want to show a negative trend. Probably, I don't know what they're calling for. I've read 8.6, 8.7, so quite a big drop. I think anything with an 8 on it, Wall Street is happy. Like, yay, what the Fed's doing is working. See, peak inflation, it's all going down. It's magic. It's pixie dust, blah, blah, blah. That's what Wall Street wants. Macro guys are looking at this going, yeah, gas is down, but rent's not in there, lagging indicator, wages are up. We just saw the wage number go up. There's all this wage. The last CPI report at 9.1 was broad-based. It wasn't concentrated in oil. So kind of like the jobs number that came out today, if CPI, these are ifs at this point, if CPI comes in at 9.3 or higher, stock market's not going to like that. Rates are not going to like that. If the CPI comes in at 10 or higher, I think you get an inter-rate meeting. Again, I'm not calling 10. I'm just trying to lay out the chessboard for you. If CPI comes in at 10%, I believe after the strong jobs number and the CPI number that the Fed will not wait till September. They'll raise in August, probably at their August meeting. If the number comes in at 9.1 or flat, right? 9 or 9.1, I'm going to call flat. Kind of nothing happens, right? We're kind of plateauing. And then the market likes of it, it's sub 8. So that's where we are. I think it's going to be flat, right? If you gave me the over under at 9, I'm taking the over. So that's kind of where I just don't see how I would. And again, I would like nothing better than to see something with an 8. Inflation is a regressive tax. It hurts the poor the most. I would love to see it crack. I would love to see it magically go away. I just don't see it. So I'm hoping for something with an 8. I'm calling 9 or above.
9 or above. And so also, if we do see something with an 8, there'll probably be a slight splash of headlines of, hey,
peak inflation, peak inflation, peak inflation. It's over. We've seen the top. The Fed is winning. Wall Street will go crazy.
But kind of a head fake, maybe not exactly.
I would never call 1 month a trend.
Yeah. Okay.
I wouldn't call that a trend.
Well, very interesting. We'll be watching CPI next week. Everybody here, let's take interest.
Wednesday's the day.
Wednesday's the day. So let's keep an eye for that. Let's move forward. So let's talk about recession. I know you and I, especially you said, hey, it feels like the recession started in July.
Yep.
What are your thoughts on recession? Where are we today as we're in the first part of August?
Yeah. So first off, right, calling a recession starting July 1 and then seeing that 528,000 jobs were created feels kind of wrong to me, right? It's hard to think that. I still think recessions are months in the making, quarters in the making. I'm a real estate guy, right? I'm a macro economist that looks at real estate and housing. I think housing, I've said it for 6 months, transactions are going to crash. And I believe that there's 15, 16 people paid on a transaction. And if transactions crash that much, it's going to pull the economy into the recession. We did $4.2 trillion in mortgage origination last year. 2.7 of that was refinances. That's going to go to like what, 800 million or 800, whatever it is. It's going to be cut in by 80%. We're just going to have a lot more less money sloshing around the system, a lot less commission paid. And I think I think housing, we're going to have less building, less units. I think everything in housing is going depression-like, and it's going to pull the economy into recession. So I'm not changing my opinion. I think the recession will be called Q3, Q4, but yeah, hard to say July was the start when you had 500,000 jobs created.
Very interesting. Very interesting. I would agree. I think it definitely feels like a recession. Like you said, if you see a slowdown in origination, loan origination, also transactions dropping off. Transactions are definitely not the same, talking to realtors, talking to real estate professionals. So we'll keep an eye on that. Let's transition. So let's talk about Las Vegas, the Las Vegas real estate market. Two things: what's going on in Las Vegas, and why do we pay attention to Vegas? Why is Vegas so important for us that we refer to it and talk about it?
Yeah. So first and foremost, all of the data I'm about to share comes 100% from an awesome guy, Brian Lebo. I'm actually talking to him in about 17 minutes. He's going to come on my show. We're going to talk about Vegas. So this is all credit to him. I don't want to take credit for other people's work. But Vegas in the month of July is down 40%. 40%. That's 40% in transactions. It is up year on year in price. I think it's up 15% year on year. It is down 3% month on month. But again, Vegas for me, why do I look at Vegas? I've never invested in Vegas, but I've been looking at real estate for 20 years. Vegas to me moves first up, moves first down. That's why I look at Vegas. That's why I did a show on Vegas. I did New York, San Francisco, and Vegas. And I'm like, Vegas is my housing canary in the coal mine. And that's why I've been working with Brian Lebo. Brian Lebo and I have been talking for 2 years now. And that's why I've been asking, what's going on? What's going on? What's going on? And Vegas cracked. Transactions are down 40%. And they're going to get worse. Brian is really concerned about this month, August, being the worst. Brian believes that August might be the worst month of transactions in a decade. A decade.
Wow.
And again, remember what we talked about earlier, unemployment's 3.5%. Interest rates are in the fives. And transactions in Vegas have fallen off a cliff. Down 40% is a crash, in my opinion. And they could get worse in August. Oh my goodness. This is a time to buckle up. Because again, for me, Vegas, I don't have any money there, but Vegas to me moves first. So that's why I watch Vegas.
Very interesting time. So we are going to definitely have a watchful eye on Vegas. Obviously, next week, CPI number on Wednesday. Michael, thank you for all that you do. I want to just share as we wrap up to all the audience. Thank you so much for your support. Please be sure to subscribe. If you are watching this on YouTube, subscribe, one rental at a time. It's the only financial news you'll ever need, because this is what's going on. If you're in the real estate game, this is where you get your financial real estate news, how it affects real estate. Michael, tell them about your course. Tell them where they can find your course. Tell them a little bit about your course and what you're doing with your courses and students.
I appreciate that. So I have a course called How to Get Started One Rental at a Time that's gone through multiple iterations. Step one of the course is how I built a portfolio in Fresno that allowed us to secure over 100 units, retire early, replace 2 six-figure incomes. It is a very simple and straightforward course. It's get your buy box, look at it daily, understand the math, build your network, lessons learned, all of that. It's amazing, worth everything. It's only $320. It's stupid. On top of that, we've added free bonus sections. For example, one of the bonus sections you've just added is pre-foreclosures. We're constantly adding more and more content, seller financing, Airbnb, all of that. We've added more. We have a private Facebook group that you can get in and join thousands of other students speaking the same vocabulary, doing the work, networking, asking questions, posting wins, being positive people. Then we add more. Now I do Saturday deep dives. We just did a Saturday deep dive with you last week on pre-foreclosures. This week we're doing one on ADUs. We did a deep dive on buy box. We just keep giving, and the price, currently stays at $320, even though I've had coaches tell me I should raise it to $999. That's not, maybe we'll get there someday in the future, but I want it to be affordable. And to me, $320 for everything that we've added is ridiculously cheap, and we keep adding more. So maybe I'll adjust it on January 1st. Who knows? But yeah, $320 for everything. It's stupid priced, frankly.
Crazy, crazy price. Amazing, amazing value. I am a member. I am a student of the course. I bought the course.
You bought it. Yeah.
I'm a contributor. I'm super excited. So for those of you, if you do not have the course, buy the course. If you're not subscribed, subscribe to this man's channel. And then the last thing I'll say is today is August the 5th, Friday. So I'm not sure when you're watching this, but we are doing a live event in Irvine, California, rehybridevent.com. RE like real estate, rehybridevent.com. Super excited. There's a few more tickets available. General admission tickets went up this week. We're almost sold out on general admission. There are a few of those. There are a few of the diamond tickets. You can find all of the information on the website. And Mr. Michael Zuber is going to be there. He's going to be doing a State of the Union. Michael, give us a little teaser. What are you going to talk about? I'm super excited to see you and meet your wife. Tell us what you're going to do for this, for the audience there. Just a little teaser.
Yeah, a couple of things that you actually just slipped in. One of the things. So there's a lot of people that follow One Rental at a Time, and all of if you followed or read my book, you know Olivia is a huge part of this. A lot of you haven't met Olivia. She actually is so excited for the event. She's coming down. So again, if you want to meet my better half, she'll be there, which is I'm very happy about. So that's pretty cool. But yeah, basically, you know, the kind of net of it is I'm going to come out swinging. I'm going to try to scare you, shock you, wake you up. And then I'm going to say, congratulations, you're here. Let's go build some wealth. That's essentially going to be my talk track.
I love it. I love it. And if anybody knows Michael's story, he knows how to build wealth. He has created financial freedom, massive wealth for both him and his wife, his entire family. Michael, thank you for all that you share. What a great opportunity. I'm excited to see you next week. I love the show. You know, next week, I think maybe because we'll be together, we'll just pull away in a corner and record it on like an iPhone or something. So
works for me.
Super cool. Love it, Michael. Thank you. Have a great weekend.
Take care.